Hi everyone, it's Nick. I'm back with a video here on why do 90% of traders fail. And in this video, I'm going to focus in on one of the really key reasons as to why so many traders never actually make it. And now, I will say that this video is purely my opinion. This is, not based off any stats that are really concrete, but it goes off of my experience of working with traders, trading alongside other traders, and hearing other traders' experience. And it's also, I think, a fairly common kind of thing to see. So let's begin. And the key points in this video are as follows. And I'm kind of going to go through a typical kind of journey that a trader will go on when they start trading a new strategy for the first time. And just going to talk about why they end up not succeeding. So the first key point is that often a trader's focus will only be on the strategy and not performance. They're constantly looking for a silver bullet, looking at new chat rooms, a new guru, a new course to take, go on YouTube and find a new trader to learn off of. And the consensus is that this is the way that you become good. This way you succeed. You also will find that traders will expect results to come immediately. They'll be like, okay, I've got this amazing new strategy that is killing in the market, and I'm going to go out and I'm going to make money with it. And then they give up on that strategy if it isn't working immediately. This is something that I've done in the past. I know most people have done this, and most people still do this, and it's why 90% of people end up failing at trading. And this means they're constantly in the valley of despair, and they never give enough time to see results. And if these sort of things resonate with you, then probably definitely want to watch this all the way to the end, and yeah, hopefully pick out some important things. So focusing only on the strategy, and this is something I actually hear quite a lot from the students that I've coached, and it's also something I've heard a lot from people in chat rooms and so on and so forth. Things along the lines of, I'm backtesting a new strategy, or I'm just starting to trade a new approach. Now, considering that I hear this fairly frequently from traders, would suggest that most traders are actually always in the process of backtesting new strategy, starting to trade a new approach, and probably go through a cycle every few months, which is a little bit scary when you think about it. Now, when the main reason for this is it's more fun to learn and go and backtest. It's kind of interesting to jump into charts and go through a few weeks or a few months of data and see where you could have potentially made money. And we're also taught in schools, in all education really, that the way to improve is you learn more things. You keep on building on your knowledge. You add more and more kind of weapons to your arsenal, if you like. You learn more and more, and that's how you become successful. There's also a far greater amount of resources on how to trade my strategy, and there's not very many resources on how to improve performance. So therefore, if 90% of the content out there to improve your trading is based on strategic elements, then most of the stuff you're going to see is that. And of course, the biggest thing that sells is a course that's telling you how to make millions. It's much easier to sell to someone who has no idea what to do with trading a course that says, I'm going to teach you a strategy which is going to help you make 6 figures every single year, than it is to sell a course saying, I'm going to give you a framework to improve on your weaknesses. Now, because that first course is more likely to sell, it's going to get pushed out more and more on social media. The creators are going to have more money to spend on ads, which means it's more likely to be seen. Social media algorithms are going to push them higher and higher up in people's timelines because people are engaging with it, people are seeing it. And as a result, most people are going to be talking about this. And as a result, you're going to come into the trading world, or if you're looking at social media or on YouTube, the vast majority of content that you are seeing is strategic based. The ironic thing is, focusing so much on strategy is actually causing 90% of traders to fail, or is one of the contributing factors. The next thing, expecting results immediately. Again, I hear people say things like, well, I just need to execute my rules and I will make X amount of dollars in, the next 6 months or whatever. And quite often there's this sort of rush, this element of, oh, I know that there's an edge there, so I'm now going to start trading it. And you know what the strategy is, so you should make the money straight away, right? That kind of makes sense. You can see the potential in it, and often strategies look super easy in hindsight. You look back and go, oh yeah, of course, if I had just seen this, then obviously I'd have taken this along. But you didn't, and maybe it wasn't so easy to see in real life. So you kind of look back and it seems really easy, and as a result, when you go into trade, you think it's going to be easy, so expecting the results to come immediately. Now, a big thing as well is when you're backtesting a strategy, or when you find a strategy, often it's going to be in a market where it's pretty easy to trade that approach and the setups are pretty obvious. If you look at the small cap market, for example, there will be periods where there are tons and tons of small caps ripping in the pre-market, which gives amazing opportunity on both the long and the short side. But if you fast forward 3 months, often they'll have gone for a cycle where you won't have that many low floats gapping up. You may go through periods where you're an incredibly bullish breakout buyer. You're great at scalping breakouts. And in a bull market, it's great. But then when you enter a bear market or a choppy market, that strategy begins to move away. And what I think happens fairly often is you see the strategy when it's kind of plain and obvious for the last month or so. Or traders will begin testing it, see that there's the potential in it, and then they begin to trade it in a much harder market to execute. And therefore, the results that you saw, the potential results you saw, aren't actually possible in the current market. And another thing is that when you do backtest or when you watch videos of people talking about ideal setups, more often than not, you're either going to miss or they're not going to show you what the B grade and the C grade setups look like. And you end up taking those because maybe they still have a small edge, or it's a case of, hey, this setup actually shows up and doesn't work all the time. And because you haven't counted those in your backtesting, you haven't seen someone trade those, your results are skewed and the results aren't actually as good, or the potential results aren't actually as good as you have, which means that the edge is smaller and you're less likely to actually make money with it. Another really common thing that traders do is, after expecting those immediate results, if they don't see them, they give up and they move on to a new kind of strategy, a new edge. And I've even spoken to a lot of traders who will say, I'm doing this right now, but I'm also backtesting something which I'm looking to bring in a month's time. And there's nothing wrong with backtesting something new, but the problem is a lot of traders will put most of their focus into backtesting something new rather than focusing on their performance right now on the strategy they are testing and they are trading. And the problem's going to be that, let's say on Monday and Tuesday of next week or whenever, the new strategy that you're testing in theory outperforms the execution of your old strategy, your own execution. And it most likely will, because if your execution is poor, then you're going to make mistakes. And you're going to look and you go, wow, I lost $400 over the last 2 days trading the current strategy I trade. But my backtesting strategy, the one I'm testing out, would have made $300. So I should move on to that. The reality is that had you traded your actual strategy correctly, it too would have made $300. And the gap in knowledge is your performance sucked. You screwed up, and that's why you lost $400, not because you're trading a bad strategy. Some of the thoughts that will start to creep in are, this strategy doesn't work for me, it isn't making me money, maybe it doesn't even have an edge at all. And often when these begin to come in, you look for something shiny, you look for something new, you find a new chat room, you find a new guru, you spend a few hours scrolling through Twitter and then you suddenly see a chart that looks absolutely perfect and makes so much sense and you go, why don't I trade like that? I'll follow this guy and learn what he does or she does, right? Very common. If you found yourself doing that in the past, I have, lots of traders have. Maybe it's time to reassess what you're doing. Now, when you are constantly in the valley of despair, I love this graph. This is the plateau of latent potential. And essentially you have the orange line, which shows what actually happens, and the green line is what you think should happen. And what you can see is that for about 3/4 of the graph, your performance or your results are below what you think should happen. Now, what this translates to in real life is that when you first start something, for a much longer period than you expect, you are going to perform or you're going to have results worse than what you think you should have. As you can see, once you get beyond that point, 75, 80% through this graph, your performance actually improves and you go far beyond what you think should have happened. The problem is that most traders do not give themselves enough time to actually reach that point. So I've put up a few graphs here. These are ones that I've kind of made up a little bit, but I think they're very good representations of what a trader's journey will look like. So this first graph kind of shows how frequently you're going to make mistakes through, 120 trading days, which is about 6 months. And what you can see is that the vast majority of your mistakes are happening in that first month, that first 2 months. You're making a lot of mistakes. This is natural and to be expected. The first time you try to walk, you probably don't even stand up. You stand up and fall over. The next time you stand up and fall over. The next time you stand up and fall over. The next time you stand up and you fall forward. The next time you stand up and you take a step forward and then fall over. Okay? In trading, people or traders are expecting themselves to be able to stand up and walk immediately. And it's completely ludicrous to think of it like that. I asked one of my students once, in any journey, when are you most likely to make, or when you're going to make most mistakes? And they said at the beginning. And as soon as he said that, he went, oh, that's right. That's why we paper trade. That's why we take small size, etc. Because you are going to make mistakes early on. And like I said, I've made this up. I think it fairly accurately represents some of my journeys. And you can see that had you just stuck at it for 2 or 3 months and focused on improving, by the time you get through those first couple of months, well, now you're only making 1 or 2 mistakes a day at most. And there are some weeks towards the end where you're making very, very few mistakes. But the key here is you're going to make a lot of mistakes early. Now, in terms of the costs, this was kind of somewhat made up. Again, you can see the cost of the mistakes is more towards the beginning. Later on in the model that I used, I increased size slightly to represent scaling up once you're seeing profitability. But again, you can see that at the start, there is a huge amount of cost in mistakes. And what people will often go is they'll say, oh my God, I've lost $1,000 compared to what the strategy should have done. I suck. Well, yeah, because you've just tried to stand up and walk for the first time. Of course, you're going to fall over and make a big mistake. You can't look at it as a case of you're always going to be like that. You need to say, right, okay, fine. This first week, I have cost myself $1,000 in missed profits and losses. Fine. How can I improve on that? Next week, $700 of missed profit and losses. Fine, that's an improvement. You keep on that path until a couple of months in. Well, now you're only making a couple of $100 worth of mistakes each week. And then finally, never giving yourself enough time to see results. This is probably the cleanest representation. The blue on this chart is the achieved P&L or the accumulated P&L when you're starting to trade a strategy. And the orange is the gap between, orange is essentially how much money the strategy would have made in theory. And you can see, if we just look at the blue colors for the moment, in this model, it wasn't until day 70, which is about 3 to 3.5 months into trading this strategy, that this trader saw profit. 3.5 months before they saw any profit. But then by 6 months, they were up 5,000 and are growing their account exponentially. You can see as well that the gap as we got to around day 70 was about 4,200 at a guess without all the numbers. So 70 trades in or 70 days in, they've missed out on $4,200 worth of profit. Right at the end, they've missed out on a little over 5,000. So the first 70 days cost them 4,200, 4,200, whatever. The next 50 days cost them 1,000, if that. And that's where the profit was. The biggest mistake so many traders will make is not giving enough time to see results. So what can you do to make success more likely? I don't think I could really make a video just pointing out loads of flaws that traders have without actually giving some advice on how to become more successful. This really comes down to how you plan out your trading career. The first thing you need to do, if you have just started on a new strategy, or you've been trading a new strategy for a while, or you've just joined a chat room, whatever, fine. Expect to make mistakes early. Expect them. They are going to happen, and that's fine because that's how you learn. The baby standing up and trying to walk for the first time, if they never made a mistake, they'd be sitting on the floor still, and they'd never walk. None of us would ever walk. We have to expect mistakes, make mistakes, and make a lot of mistakes early. The best way to therefore mitigate actual risk is to paper trade and use very small size to limit the cost of mistakes early on. If we go back to this real quick, instead of trading real money, what if the first month you paper traded and learned where your mistakes were? And then the next month you traded at 0.25%. And then the next month you traded at 0.5%. And then by the time you get to month 3, at the point where you would start seeing profit, you may already be in profit and you can increase that size earlier. Continue to refine your edge. This is a big one. What often happens is you'll learn a new strategy, you'll begin applying it, and you'll just leave it as it is. You need to collect the data of your trades and be able to look back and go, okay, is there a way that I can improve my edge? Is there a way that I can improve the win percentage? Are there days that I can sort of see ahead of time that are going to give a better risk reward or a more likely chance of having a lot of winning trades? How could I increase and decrease my size on different setups based on how likely they are to make me money? If you can do this, you continue to refine the edge, then you're going to increase it. And when you increase your edge, you give yourself a little more wiggle room. You can make more mistakes and still make money. Have a process in place to find mistakes and improve on them. This is huge. You cannot just take a trade and go, oh, that was a dumb trade, I won't do that again. You need to go, oh, that was a dumb trade, why did I take it? Note it down. Okay, I got FOMO because I saw a big move in the market and I therefore wanted to jump in something. Okay, fine. 3 days later, oh, that was a dumb trade. What caused it? Oh, FOMO again. I saw a big move again in the market and that made me jump into something. Now you have a mistake to focus on and improve. You need to have a process in place. And you also need a process to fall back on when things go badly. If you are in a situation where you've been trading a strategy for a few months and maybe you have a couple of weeks of success and it goes great, and then you have a week where everything falls apart, that I believe is a breaking point for most traders, where maybe they've made back the loss that they've had. Let's say they've traded for 2 months and they've lost $2,000. Then over a couple of weeks, they make $1,500 of that back. And they're like, yes, I get this now. And then the next week, they maybe increase their size or whatever. They lose 1K. And they're like, all that profit that I just made back, I've just lost. You need a process when that happens to fall back on. Now, a process that I've created is a course that I've called the Trading Blueprint. It's on my website. You can check it out in the link below. Essentially, the idea behind the blueprint is to give you a whole guide, essentially, from creating an edge, backtesting the edge, refining the edge, starting to trade the edge, tracking performance of the edge, tracking your own performance, how to improve performance. It gives you everything you could need. So check that out. If you want to ask any questions about it, just send me a message on Twitter or comment below and I'll get back to you. But the idea is that it's going to stop you from jumping from guru to guru to guru, from room to room, and you are going to be able to become self-sufficient. I'm not going to pretend that it's a brand new strategy out there that will make you millions. It is a process that you work through. It might take you 2 months, it might take you 3 months, it might take you 6 months. But once you tick off every stage in the blueprint, you will be at a point where you are consistently making money. If you get to the point and you've ticked them all off and you're not, then you've probably not actually ticked off some of the points in there. So it's work, but it's actually really worth it. And then finally, don't just give up on an edge that you can prove works. This is huge. Like, if you have an edge that you know works and you've had a week where you've traded it poorly or it hasn't performed well, throwing away 2 months worth of backtested data and hours of refining and hours of forward testing, hours of paper, throwing that all away because you have a bad week or a bad couple of days or it feels wrong doesn't make sense. Every single time you do, you're putting yourself back to square one. I like to think of it as you want to master an edge. And if you spend a couple of months on it, maybe you get to 40 out of 100 in mastery. You need to reach 80 to be profitable. If you chuck that edge in and go to something else, you're back at 0. And those next 2 months get you to 40 again, chuck it in, back to 0. Give yourself a chance on the strategy you're trading right now. Just give it a longer period. Say, okay, you know what? I'm going to give myself 6 months on this. Because maybe after 6 months, you'll be at 60 or 70 and you'll be like, actually, I am making money from this now. And I'm pretty close to mastering it to a level that I need to be able to make consistent profits. So yeah, I hope you enjoyed the video. Comment below any other reasons you think that 90% of traders fail. And let me know how many of these mistakes, or this mistake path, if you like, how often you have fallen victim to it. See you again in the next video. Thanks for watching till the end of the video. Just adding a quick piece in here to let you know what extra services I have to help you become a better trader. On my site, guidedtradingmeditations.com, you can find my new course, The Trading Blueprint, which gives you a full guide on how to create an edge, test it, start trading it, and scale up. There are sections included on how to find weaknesses in your trading and then how to resolve them, as well as many other bits of information that I've gathered in my years of experience. The aim of the course is to make you a fully independent trader so you don't need to pay ever-growing monthly fees to be in a chat room. There's no specific edge needed. You can use this in any market with any trading style. If you're at a stage in your trading where you're struggling and would prefer a more in-depth look at your own personal weaknesses and ongoing support, you can also book one-on-one coaching with me on the site. There's a cool breakdown on the screen right now, so pause the video and read through it, and if it's something you're interested in, check it out. There's a ton of other content on the site that I'm really proud of and I've really enjoyed making, so if you're interested, please check it out. I'm sure there'll be something on there that can help your trading. You can reach me on Twitter. My handle is in the description down below. You can send me a DM if you'd like any more information. And make sure to like and subscribe to stay up to date with future videos.